Mastering Forex isn't as hard as you think it is. Today we're going to be talking about mastering Forex, and I'll just put this out there straight away. When it comes to mastering Forex, it's not about how to win every single trade, because that is an absolute myth. I don't know any single person who wins every single trade. Your aim is to be profitable. So that means at the end of the week or the end of the month, you're looking to have gained more return on your account than you have lost. But then we're not talking about winning more trades. We're talking about how to master your Forex style. I get quite a few new subscribers every single day, and so just in case you haven't been following my YouTube channel, the style of trading that I do are smart money concepts and institutional trading. I absolutely love it and I won't change it for nobody. Every single person's gonna have a different Forex style that they're trying to master. You might hear one thing from my videos and try to master that, and then that was your edge in your trading. You might hear multiple things across various different videos. It doesn't just have to be my videos, it can be other people's videos too. Various different things, and then you've managed to combine all of that, and now you've got your trading style. Now it's all about how to master that kind of trading style. So I'm sharing with you guys right now how I mastered my Forex style of trading. This is in no particular order, but because I've mentioned this already, I'm going to mention it again. It's not about winning every single trade. The other day I lost a trade and I won a trade, and I posted that on Instagram. The losing trade was negative 1%. I don't risk 5% per trade. I don't risk 10% per trade. I don't go wild and start risking all kinds of or percent per trade. I used to do that back in my retail trading days. Your boy don't do that right now. I risk 1% per trade, and so that losing trade was a 1% loss. But then I also won, I can't remember what it was now, I also won a lot more R. I'm gonna put an Instagram post up to the side in a moment. Since we're talking about Instagram, there's been so many fake accounts being created recently, so I just wanted to share with you guys my actual Instagram page. And so it is MHU_FX. As you can see, there's no dots, no double underscores or anything. It's just one underscore, MHU_FX. My personal page is Harrison Uwa. Before you follow any account, you can check all my links in the description below. Forex is the only thing that you can be wrong most of the time and still win. What I'm referring to is that you could lose 3-4 trades across the span of a week, but have one winning trade and be in profit. So once you understand that, then it kind of removes your fear of losing. Losing and winning is part of the game, because a lot of people, they're afraid to lose, and so it stops them from getting into a trade. And the moment it stops them from getting into a trade, that means they've missed out on a winning trade. And you know, it just happened to be so when they did jump in, it was a losing trade. Now they're just losing overall. And so that's why it's vitally important just to grasp that and understand that, and then you can move on. Like I said, these are in no particular order, so I want to move on to the next one. This one is being able to develop a trade idea. If you can't develop a trade idea, then you shouldn't be trading. What I used to do back in the day is on TradingView, I used to go to there was a little section on TradingView where people used to post their charts, and then sometimes what I would do is, although I have my own analysis, I would then switch up my analysis to fit their trading. Sometimes it'll do good, but the majority of the times it was just off. What you need to do is you need to go forth and back test the things that you are learning. Once you understand it, you're developing some kind of belief system around what you are learning. And once you develop a belief system, you can go forth and forward test that. And then after you're happy with your results from forward testing, then you can go forth and decide, if it's up to you, if you want to, then you can go ahead and start trading live. You can't base your trading ideas off of something someone else has said. You need to see it for yourself first. I kept on going back to that same analysis part on TradingView, and I needed it. I couldn't really jump into any trades before looking at what other people were saying. Develop your own trading idea and trust in that. A very important one is trading your trading plan. This is probably one of the most difficult things any trader can do, but we are taught the importance of it. Ain't no one gonna follow no trading plan, but to be able to master Forex, you need to be able to trade your trading plan. If your trading plan said, I'm gonna stick to this number of trades a day, this number of trades a week, this number of trades a month, you need to stick to it. If it says, I'm not going to trade on Mondays, but I'm going to trade it on Tuesdays and Wednesdays, then you stick to it. If it says, I'm not going to trade in London, I'm going to trade in New York, you have to stick to it. No matter what you see, stick to your trading plan. If your trading plan said, I'm going to trade towards the money, and I'm not going to enter for no support and resistance and, you know, and stuff like that, then you need to stick to it and trade according to your trading plan. And then another thing as well, once you've reached your percentage goal for the week, you're done. It's not about getting more. Someone reached out to me the other day and said, really truly, this trading thing is a game. If you know how to trade and you can catch another 1 to 10 or 1 to 5 or 1 to 20 or whatever it is, then really truly, wouldn't you just want to stack up on your 1 to 20s just because you're going to have those losing days? Nah, it's not how it goes. If you start trading more and you start losing, then you're playing yourself, you're going against your trading plan, and that's what you don't want to do. If I lose 3% a day, I'm done. If that's what your trading plan says, then stick to it. Don't be trying to risk all 6%, 7% and start revenge trading and trying to get your money back and all of that. Forget it. Stick to your trading plan and you will be able to master your Forex style. Another big thing is entering at your price and not the broker's price. You guys have heard me say this before. So just to clarify that, your price is the price that you want. So let's just say you want price to come back down, just a random number, to 100. Price is at 200. You want it to come down to 100 before looking for an entry to then take it back up to 200, for example. You entering at your price is when price comes back down to 100, you enter. Once you get your bullish sign and then you take it up. You enter at the broker's price is because you think the trade is gone, because you think you've missed the trade, because you see the trade pushing up. I'm entering at 150 or I'm entering at 200 because it's just going and it's not stopping. That's the difference. You enter at your price. Wait for price to come to you, because the broker's price is never the best price. If you start experiencing all kinds of FOMO and all kinds of feelings towards that trade at that point in time, then really and truly you're going to play yourself, because you're going to have to either compensate with a larger stop loss or you're going to keep on getting stopped out. It's as simple as that. So this one's vitally important. This one is taking partials or closing your position. I'll be real with you, in my very first days of trading, even my first days, and like my first year or even 2 years, even year and a half to 2 years of trading, I wasn't taking no partials. I didn't like the idea of taking partials, despite everything I had heard about partial taking. Someone said that when you take partials, that's how you really compound your account. I heard it, didn't really believe it like that. I wanted to hold full positions every single time. And then what would happen, price would push up in my favor, move my stop loss into profit, or come back down, hit my stop profit, and then continue to go in the direction I wanted it to go again. So that's what would always happen. And that was because I never took partials. You need to take partials in your account. I tell my mentees every single time, when price runs liquidity, you best be taking some partials. Vitally important to take partial profits or close off your full position. I'll be more happy that I've taken partials and prices come back down to hit my runner than me not taking partials and prices come back down to hit my stop profit. That's how you really compound your account. Take partial profits. Another thing, when you take partial profits, it calms down your emotions. Just imagine you're in a trade, you're excited, you're happy, price is going in your favor, it's just run liquidity. You're going to be excited, you're going to be happy. Just in case price turns back on you, what are you going to do? Take partial profits. And that's because if price comes back down to hit your stop profit, you don't care. You don't care, you're good, you're fine. And so that's why it's vitally important to take partial profits or close your position. So if any trader told you to hold a full position, I'm not saying they're wrong, but just know your boy takes partials. I take partial profits when price runs out liquidity. I let my runners ride, and then if price gives me enough opportunity to jump in again, I'll jump in again with another full position. And guess what? I'll take partials again when price runs liquidity. The very final thing that helped me master my trading style is when I'm done trading, I'm done trading. I know I've briefly touched on this before. Now I'm going to touch on it properly. One thing that used to happen to me all the time is once I've hit my return target, I'll be happy, I'll be excited. Then I'd start saying, you know what? Even if I lost a little piece of this, I'll still be up, and then I will trade again. And it can go in two ways. You could lose the trade and then now you're ticked. You're ticked because you're trading more. And so you want to jump in again, try and get that money back that you just lost, but then you lose again. And then it just becomes a cycle of trying to get your money back. If you had just stuck to your trading plan and said, once I've hit this return target, I am done trading, then you would have been happy. You could have done something else with your time and just enjoy the rest of your time, really. Or it can go the other way where it goes in your favor and you win again. This is also bad. And you know why it's bad? Because you've shown yourself that you can go against your trading plan and win. And that's a bad day, because what you're kind of doing, you're developing the trading muscle memory. I just made it up, but you're developing the trading muscle memory that you can go against your plan and still win. And that's always a bad day, because now once you're in that scenario again, you're going to remember what you did when you went against your trading plan and you won. And then you're going to be expecting that to happen again. And then you're going to jump in again, and then you might lose again. And then this is the cycle of, eventually blowing your account. This is why it's vitally important to be done with trading when you have hit your return target. And your return target doesn't have to be huge. It doesn't have to be 10% a week. It doesn't have to be 20% a week. It can be 5% a week. It doesn't have to be huge. It doesn't have to be something just way out there, 100-hour a week. 10% a week is absolutely amazing. So these are some of the things that have helped me master Forex. Hope you guys enjoyed it. Peace.